I would now like to invite our moderator on stage. So let's have a huge round of applause for Mr. Jungkiu Choi, Managing Director and Senior Partner, Boston Consulting Group, BCG. Let's have a huge, huge round of applause for him, please. Very warm welcome, Mr. Jungkiu Choi. Welcome, sir. I could you please take your seat. I would now like to invite our elite set of speakers. Please help me in welcoming Mr. Anubrata of Biswas, MD and CEO, Airtel Payments Bank. Very, very warm welcome to you, sir. And ladies and gentlemen, it gives me immense pleasure to now invite on stage Mr. Jai Kotak, Co-Head at Kotak 811 and SVP Conglomerate Relationships, Kotak Mahindra Bank. Let's have a huge, huge round of applause, please. Very, very warm welcome. Thank you. Gentlemen, please take your seat. Sir, over to you.
Good afternoon. It's my honor to be here. I'm a Korean working in Singapore now. I came to India since 1996. And at that time, we haven't talked about anything about fintech, any digital. And now it's a very, very different country after many years. And now we can have this huge audience talking about fintech and challenger banks. One thing I miss is I cannot find the same Budapao on the street is all gone. I cannot find this, so I got some recommendation from you. So let's begin with some overview. So globally, there are about 617 challenger banks based upon fintech or license. But the growth of the challenger banks has been slowed recently. But it seems like in India, it feels a little bit different vibration here. So can you share, beginning from Mr. Biswas, what is your key experience in Indian challenger banking market, and what is your view of thesis? I'm going to ask the same question to Mr. Kotak later. So, Mr. Biswas.
So thank you, JK. India's in a very peculiar situation. You've been coming here since '96. Very interestingly, between the last 20 years, per capita income has not grown as fast as has the GDP, primarily because the population has been growing. If you really look at per capita income and population as a graph, and you try to put all the countries which have challenger banks, India's at an extreme left bottom position, which means it's unique in its place in terms of having very large population with very low per capita, which really means that India from a challenger bank or digital bank point of view needs a really different set of solutions. And I'm very happy to say that India's thought through this very deeply over the last 10 years. And two big things have happened. The first is that India has a digital public infrastructure, JAM, UPI, so on and so forth, which has really reduced the cost of delivery of service. And that actually allows you to access a very large amount of population at a very accessible cost. And the second is India's tested various what we call differentiated bank licenses, payment banks being one of them, which of course has had the ability of rewiring existing infrastructure, in our case that of the infrastructure of a large telecom company, in order to drive down costs of service more. And therefore the thesis of a challenger bank in India is really very simple. It is scale. Globally, if we see challenger banks tend to follow a 7 and 7 model. The 7 and 7 model is the first 7 years they will attain scale and hit maybe a profitability metric, and the next 7 years they are going to really attain impact. For payment banks, Airtel Payment Bank in particular, we've hit our 7 years and we've hit profitability at very low cost to serve, broadly 10x of traditional banks, but equally, of course, very low revenues on top. And we are entering our next 7-year phase, which is the phase of delivering population scale impact.
Thank you. Can I ask same question to you, Mr. Kotak?
Sure. Thank you. Good evening, everybody. So for me, challenging is hard because usually the incumbents have done something right to achieve the scale that they have in any business. And one of the things that Jeff Bezos actually said is something that really I like when I think about challenging, which is that you stand on the shoulders of others when you challenge. And what he meant by that was he said Amazon in 1997 was only possible because a group of other folks had done hard work over 3 decades before to enable businesses like credit cards and online payments and logistics, which is a huge, high capex, long lead time business. And that suddenly allowed a whole host of other businesses to flourish on top of that. My thesis for digital banking in India is that a lot of other folks have done an outstanding job, particularly over the past decade, to build some of those kind of foundational backbone platforms. We all know them. Aadhaar for identity. You cannot think about financial services without identity. UPI for payments. 4G telephony and rock bottom price handsets, which I think is another one that maybe we don't realize how important that is. The fourth, in my mind, is more in our minds. It's the mindset change that demonetization and COVID brought to 1 billion Indians that made them believe in some of this kind of subtly. And lastly, talent. The talent ecosystem that we've built in this country over the past 25 years to build for the digital future is something that really excites me. So we stand on the shoulders of others.
Thank you. Just I want to echo one point. As an outsider of the market, the digital ID system in India is just mind-blowing. Many countries tried and they failed. And it's one of the huge infrastructures. So a lot of people asking why India is progressing so well. Sorry guys, you don't have that digital ID system. That's a huge bottleneck for all the success of the challenger banks. So let me twist the question a little bit differently. When the challenger banks coming in, they are struggling to find how do I differentiate. As you mentioned, Mr. Kotak, the traditional banks in India have been doing very well actually. There's no major hiccups. But how do you come to a differentiation when you're running a challenger bank? Let me begin with Mr. Kotak first.
Sure. So firstly, I think at 811 we stand in a slightly unique place where we're sitting inside an existing institution, and so in many ways you're both partnering and challenging the institution in which you sit. But I think the traditional Indian banks have not done as good a job as they could have in leveraging some of these platforms. When you think about Aadhaar, you think about UPI, you think about bill pay, you look at the market share of the traditional Indian banks in a lot of these businesses, they've not really attacked it. So I think that's where the opportunity starts.
Can I ask the same question to Mr. Biswas?
So firstly, I completely agree on the leveraging of infrastructure. I'll make a slightly tangential point and just please allow me. You know, if we look at banking as a service and a business across the world, it's broadly been a basic plumbing business. People have wanted to keep money and to spend them and to save, and they needed a place to keep it. The reason why accounts are plumbing is because the costs of entry and exit are fairly high. In India especially so, 66% of public deposits are really in public sector banks, etc., all of that. We are rapidly entering a phase where the friction is reducing so much that the commodity nature of this industry is allowing or making way for specialized needs to surface. And that's a very powerful insight, JK, we've built our really digital proposition on. As UPI has grown, 400 million people, so has the need for people to protect their money. And a growing consumer insight really is around the fact that they want their money to be safe and they don't want to expose their main bank account to digital frauds. That as an insight actually has been a very powerful driver for uptake of payment bank accounts. And I use this as an example merely to say that the moment a commodity industry starts resolving into higher order special needs, actually the plethora of services which can be offered by challenger banks start multiplying. We've seen this in certain other frictionless economies. Equally, we've seen this in economies which are migrating from a high friction point to a low friction point, Brazil being a classic example. And for us, we are seeing very, very large uptake on the digital side for this space of being India's first choice for a safe second account.
So also, Mr. Biswas, you mentioned that India is quite different because of very low GDP per capita and hugely underbanked. By the way, this underbanked issue is a big issue globally. More than half of the population in the world is either unbanked or underbanked. Okay, let's forget about all the developed countries, but coming to developing markets, financial inclusion is one of the big concerns of the regulators and communities. So let me begin with the Airtel Payment Bank. What I know is you have 8 billion transactions per day. You are serving all the metropolitan cities, tier 1 and tier 2s, and also underbanked, and also digital savvy. So these are the formula that many banks tried, but not so successful. So how do you do your financial inclusion, and what is your view on how to make it very successful? I'll ask a slightly different angle for you, Mr. Kotak, later.
Let me give one number which has been a powerful number driving our philosophy. There are 200 million mobile banking users monthly in the country, 400 million monthly digital payers in the country, and 800 million smartphones. This 248 ratio just indicates to all of us here in this room the immense potential and opportunity for digital financial inclusion, which was pointed out by the governor in his speech yesterday. However, this needs different approaches for different segments, and one or two stories I'd like to narrate, really. The first story is a story of hard work. Jay pointed out, the wave of COVID and the fact that people started valuing digital. People also equally started valuing close by your neighborhood access, especially in rural areas. I have some of my colleagues here whose faces I can see in the room. There has been a tremendous amount of hard work done in terms of rewiring the absolute last mile rural infrastructure, with the telling impact that there are 500,000 villages in India with population less than 2,000. Airtel Payment Bank serves all of them in a radius of 5 kilometers today. The second thing is our realization that as you build out physical and digital infrastructure at very low cost, you start riding the waves of social change in India. So the second story I'd like to really point out is that today, a third of our accounts which we are opening every month, we broadly open 1 in 10 accounts in India today, monthly, are picked up organically by women across various states of India, and the profile of these women are that they are first-time smartphone owners. They want to have an account separate from their husband or their family because they want to save in their own name. So the point is that the moment you rewire the last mile, the moment you offer digital access, we've seen that there becomes a very interoperable play between consumer segments and channels of access. So we feel fairly proud yet humble of the fact that we've built a full service model for both India and Bharat.
Mr. Kotak, your view might be slightly different because Airtel Payment is a pure digital play, but you have your bank and also there's Kotak 811. So do you have any special view on how to divide and conquer, or do you asking Kotak 811 play more financial inclusion? I want to hear from you. How do you see the overall financial inclusion from both the traditional bank and the digital channel point of view?
So first, I believe that solving any problem at scale, if you look at recent economic history at least, it's markets and enterprise that have brought, included people in financial ecosystems around the world and brought people out of poverty. And I believe that is the solution for India as well. And for me, it foundationally comes down to cost to serve. India today, I think we've crossed the threshold where hundreds of millions, if not a billion of us, can be profitably served by financial services players with the right cost structures. What I know for sure is that going deep into India to serve the less affluent Indians profitably requires a different mindset. You look at companies like Bisleri, you look at companies like Hindustan Unilever, who have solved that very, very decisively. I don't think banks have done that as well traditionally, because this whole business model of, if I have to go to a new town, I'm going to take a 1,700 square foot space on the high street and hire 25 people and then have an ATM and then have a cash vault and then have an armored van come every day. All of that adds cost. And those kind of costs make sense in affluent urban areas, but not necessarily in all parts of the country. So serving cost effectively is very, very important. One of the things I'm always surprised by when I look at, I talk to bankers around India. They often say there's kind of a golden threshold of 25,000 rupees a month salary, below which it doesn't make sense to serve by the current business model profitably. What interests me more is that 80 to 90% of Indians are below that salary range. And that just means that your target addressable market with the current banking model doesn't work. So how do you solve that? I think acquiring digitally, serving digitally, with the touch of physical presence. I do think, and that's where I think that having a traditional kind of physical banking setup is important. The trust, the local branch on the high street, but the cost structures don't work right now.
Yes, please.
Can I just add, because, Jay, your comment sort of made me think. Actually, we believe the sweet spot is $6. At $6 of revenue per user, it's possible to kit out a set of services based on, whatever licenses and regulations are there. We've hit that sweet spot around a year back. And our thought process is that as you build scale, the $6 will move to $12, which is broadly 1,000 rupees of revenue per user a year. And I want to link it back to the first point which Jay mentioned of Jeff Bezos. Ultimately, that increment of $6 to $12 is going to come at very little marginal cost because you've built out the platform.
Also, it's a very rare opportunity as a practitioner like me, meeting the real guys bring the real businesses, just giving you some painting of it. As of end of 2022, there are 431 properly licensed digital challenger banks or fintech challenger banks. I'm not talking about the digital channel of the traditional banks, but only about 20 range of them really making money. So I have two different questions, one by one for you. You mentioned you become already profitable. It's very rare, by the way. So just want to hear from you as a payment bank, what is the secret behind to make it really profitable? It's very challenging. There's a lot of puzzlement in the whole market.
Yeah, I think we've covered the answer honestly in bits and bobs, but let me just summarize it. It's difficult to construct a profitable revenue model when capital deployed is essentially used for balance sheet. However, if it's a pure operating leverage model, then you can really deconstruct the business into a revenue and a cost equation. And we look at it very simply, very similar to, let's say a telecom company. Today we earn roughly $6 of revenue per user, and our costs are $5 per user. Costs, as we've discussed, is a function of scale and the fact that India's got this DPI, which allows us to operate almost without boundaries. The thought process for us is, what are the categories where there are significant gaps? And I link it back to the argument we put forward of 200 million mobile banking users and 800 million smartphones, which indicates a 500 to 600 million opportunity, which is possible to serve at scale extremely profitably. Because in any profitable business, the question always is it sustainable? One. Two, is it future-proof? The future-proof point I'll leave aside, but certainly as you build out a platform play, where your incremental revenue is not going to come at the same amount of deployment of cost, you're going to start seeing improvements in the margin model, and you will have built finally whichever way you like to call it, a defensible moat. We are really deeply distributed in rural India, and our digital app now is the 6th largest mobile banking app in the country today. All of these are moats to compete with.
So, Mr. Kotak, also it is a puzzle that many legacy or traditional banks launched separate brand named digital channel. But unluckily, so far, most of them failed. So I don't know about in India, but at least outside of India, we study you as one of the very few success cases. So also, can you share some secrets behind of how do you make this successful? Because most of the challenges in the traditional banks, having difficulty managing internal conflicts, all those kind of stuff. So if you can share some light on that, that will be very, very helpful.
So first, thank you for the kind words, but my definition of success for us is considerably higher than I would say where we are today. But yes, I think we've achieved some traction, and part of that has to do with how we thought about this for Kotak and for 811. There's a rather famous business theoretician and professor of mine in business school called Clay Christensen, who wrote a wonderful book called The Innovator's Dilemma, where he basically outlines that as businesses get larger, first, the economies of scale, they begin to benefit and reap the benefits of economies of scale. But as they go out even further, the bureaucracy and scale actually becomes more of a headwind and less of a tailwind. And one of the things he said is, the only way for such businesses to reinvent themselves is to incubate autonomous or semi-autonomous units within them that have the explicit mandate to disrupt. So disrupt from within, because if you don't disrupt from within, somebody will disrupt you from outside. I think that's what we are trying to do at Kotak and at 811, is to look for the future. And it's very important, the word autonomy or semi-autonomy, because it requires a different set of folks sometimes to build for the future than those who have necessarily built for the past. That's not always the case, but oftentimes.
That's really fresh air for my ears, because we've been arguing the requirements of the autonomous and self-challenging many times, but not many organizations actually can do that. So far, we discussed a lot of great future opportunities, but also let's also not forget there will be a lot of challenges ahead. So, Mr. Biswas, if in your view, in the challenger bank in India moving forward, what will be the biggest challenges and troubles or bottlenecks moving forward?
This is actually the great paradox of India. The fact is that digital public infrastructures reduce friction, ensures seamless access, and therefore drives massive market coverage. But the fact of the matter is that digital public infrastructure also ensures margins are completely eroded, some by policy, but most importantly, just by the removal of friction, because that's where private companies really thrive, which is solving for friction and getting margin. This is something which the banking industry, particularly digital banks, need to deeply think about. We have some hypotheses as to what's going to happen. But I'll paint the paradox with another problem, which is perhaps a deeper problem. India reached its fertility rate of replacement roughly 2 years back, which basically means that any incremental growth in GDP is going to result dramatically in per capita income growth. As a result, India is going to very rapidly reach $4,000 to $4,500 of per capita income, which really means that if you marry the per capita growth of income issue with the paradox issue, you need two very simple things. You need challenger banks to increase product ranges so that consumers get full choice and you get a margin play. Payment banks are a classic example. Our dominant product is in the savings bank account category. We want to sort of offer more products so that we can really lock in the customer and really serve him well. And the second potential approach is really to allow better and freer competition by, for example, treating the banking industry almost, if you will, like a telecom industry. Today it's possible to change a SIM and a SIM number in 3 days. There's no reason why a consumer should really have to go through the hurdles of opening a bank account over days. And even with that, his banking account relationships remain with his primary bank. So account portability and account interoperability would be a very, very important driver to thrive and to open competition. And these would be our two big recommendations in order to manage change.
Mr. Kotak, can I ask you the same question? In your view, what are the key challenges moving forward? But also, if you have any other last thoughts you want to share with the audience, would you please share that?
Sure. So for me, I think the challenge for digital banks, for fintechs, is not very different from the challenge for all technology startups, not just in India, but around the world. It's the fact that there are 5 or 7 extremely large international companies that if they see a profit pool anywhere in the world, have large and profitable primary businesses which can allow them to subsidize and take very long views on profit pools around the world in countries like India, which means that it's difficult to compete with some of that. And that's really, to me, the number one challenge. Another one at a certain level is particularly rooted in banking and in digital banks is trust. I think the average Indian, the number one thing he or she would seek from where they keep their money is safety and credibility. And that's something that all of us have to always never take for granted as we build out our infrastructure, platforms and services.
Mr. Biswas, do you want to share any last thoughts with the audience?
Well, bankers are fundamentally risk managers. But I just like to strike a more optimistic note. It's always been that we prepare for black swan events, stock market crashes, things which happen which can really take the wind out of our sails. But I'll just position to the people in this room that, there has never been a single amount of productivity increase in the human economy without a golden phoenix event. The steam engine was a golden phoenix event. The semiconductor chip was a golden phoenix event. The Aadhaar and digital public infrastructure in India is actually a golden phoenix event. Productivity gains are unquantified because you just can't put a mathematical model behind it. So I remain, as a practitioner, fundamentally very, very optimistic about the future.
Thank you. I think we have just 1 minute or so. If there's any question from the audience, would you please raise your hand? Yes, please.
can hear you.
Hello. Hello, gentlemen. Thank you for the insightful session. Since you mentioned about trust, my question is around that. How different is it to earn the consumer's trust for both of you? Mr. Kotak, you have the backing and the trust of the legacy Kotak Mahindra Bank. And Mr. Biswas, for you it must be slightly different with the backing of a telecom giant. How different is it for both of you in managing the trust expectations of the new age customer?
So I think the first answer I gave on this panel was we stand on the shoulders of others who've come before us and on all the work that they've done. That's as much true for the public platforms that's been built in India as it is in the case of Kotak for the 35 or so years of trust that has been built. So I'm very grateful for it. I don't think it's possible to build a banking business without trust. I think trust takes a really, really long time to build and a really short amount of time to break. So just grateful and always knowing that hopefully what we build, somebody will look back and build on top of it.
Much the same, but with a small little flavor. We did a research 3 years back, and I personally, as a banker, as a career banker, was astonished. In tier 5 and 6 villages, the brand which we are a part of was 20 percentage points more well known than the nearest, largest bank. And so, as Jay pointed out, we feel very proud to stand on the shoulders of Airtel, and it is our responsibility to deliver good outcomes.
Dear Mr. Kotak and Mr. Biswas and dear audience, it has been my honor to be part of this session. I learned a hell of a lot, and I'll bring all the lessons from you. And thank you for all the great conversation and attention. Thank you very much.